let's talk about another stock that's in the news today, and it plays into this whole story. It's Alibaba. Okay, we've made it our call of the day for the simple reason that it's relevant to this day. Initiated by at Jefferies, $216 is the price target. Weiss, you previously owned it. Mm-hmm. What do you make of this call, or whether it's just too risky to get into any names with this level of China exposure, given what's going on?
Right. So I owned it because they're saying they're going to have a dual class stock. Well, they have dual class. What I meant by that is dual listing. So they're going to list in Hong Kong, and they're going to continue their listing in the U.S. I thought that would drive a lot of demand into the share, so it was more of a trade. However, it got out relatively quickly when, frankly, the stock started to deteriorate, so got stopped out, even though I didn't use a formal stop, so I was willing to take some pain. But I sold just because, you know, you can't have those kind of trades on in this kind of environment. And it dropped like a rock. So China is going through their own economic issues, obviously, and weakness in the economy. I just don't believe it's a stock to play at this point. Now, when it's come down to this level before, you've seen them move up to about 180. So if you want to do that, but you need stabilization in the economy there and trade talks
it's just
to work.
Gutsy, to put a call like this out in the environment that you're in.
It's an initiation. So my point, so what I believe would have them run a big research department. This is the time when the analysts finish the report and want to get the product out there. And it'll be a long-term buy, and it'll work out over some point, and it grabs some headlines.
If you think that the president of the United States is intervening with U.S. companies and CEOs, what goes on over there is 10x, and you can't read the natural language newspapers, so you really have no clue what's going on. I'm sure this is good research, but I think at the end of the day, if you're someone who wants exposure to Chinese internet companies, I've always favored KWEB, KWEB. It's had fantastic years. It's had bad years. Trades along with Baba and all of the other large caps there.
Would you?
But
own
like
it?
You look at no, I would not own. I would not own it here because there's no trend. But in a trending environment for those stocks, I like that better than picking Baba or pick. Look what they did to Tencent. A company had political difficulties because of the government decided too much video games. They cut the stock in half. That can happen at any time with these names. So if you really want exposure, A, I would wait for an uptrend, statistical uptrend, not a technical. But B, I would buy the basket.
That said, there's an IPO today, a listing at the New York Stock Exchange, AMTD International. It's a Hong Kong-based financial services firm.
You can have it.
And the stock is having a look at that. I mean, that's on the opening day. Loop, by the way, just in full disclosure, Courtney Gibson on the show. Loop was one of the
We're having a very reasonable debate on time frames and investing versus short term. And when you bring forth Alibaba, you immediately think of the troubles overseas and the emerging markets. Okay, on a longer term perspective, you want to go buy Alibaba, step right in, buy the emerging market asset class, put it in the portfolio if you believe on a longer term perspective. Baba's going to work. Emerging market's going to work.
AP's not feeling it.
Why not?
No, let me just make a point. I'll turn to you. The other issue is, because I've seen this, because I've owned companies where Chinese companies that list in the Cayman that trade here, which is what Baba does, where there's been a fully financed, let's say, $15 bidding table, but because the indexes are so illiquid and they're all passive indices with these Chinese stocks, the stocks come down and trade at $9. So the point is, fundamentals could be phenomenal. They could surprise you to the upside, but so much money is coming out of the Chinese market, like Zai Labs. There's nothing wrong with the company. This company's got really hurt. It's down about 20%.
I've sat next to people before on this one who, if I did nothing but try to catch up for 5 years, I would still know less than they know now. And right after I heard the most bullish pitch, it was amazing. It's every U.S. company combined. It went down like 40%. So I do U.S. equities anyway, but I just think it's impregnable to any research that I could get comfortable with.
Yeah, I agree. I'm just saying it's driven by the indices much more so than the U.S. stocks are driven by.